Good morning, folks. Glad you're here. Welcome to today's ad-free live stream. If you're here for the first time, my name's Tyler. I'm really glad that you decided to join us this morning on this beautiful Monday morning. I'm here to help navigate you through the wild world of day trading futures. So here's what you can expect during these live streams. I'm going to be breaking down live price action. I'm going to be sharing my trading bias and showing you real-time trades to give you a front row seat to all the action. Now, if you're watching this, but it is not actually, the market's not actually live, and you're watching it after the actual stream, you can jump right to the key moments using the chapter markers below, where you'll find the trades that I've taken along with the detailed explanation so you know exactly what I was thinking and why. Lastly, Apex has extended their 80% off discount for eval accounts, so you can get 80% off using the code DTJ for all of my community here. Use DTJ to get the most updated code with Apex. Now, I do like Apex. I've decided more than most of the other firms out there, and one of the additional reasons that I like Apex is the ability to do copy trading. You can have 20 accounts with Apex to copy them on a copier that is a one-time cost. Really nice to have, so you can have multiple accounts trading all at the same time. It's beautiful. Okay, folks, we got all that out of the way. Let's open in prayer and then let's get going. Father, we thank you for the opportunity that you've given us. Thank you for the ability to build wealth. You've given us that ability, Father, and we honor you in that. So today we receive the profits that you have for us. We don't chase. We're not greedy. We're not going to strive for more than what you've given us for today. Father, give us wisdom in the markets. Protect us. Protect everyone watching. In Jesus' name, amen. All right, let's get rocking and rolling, folks. It's going to be a good day. It's Monday morning. Since I started trading, I can't tell you that how much I enjoy Monday mornings. Monday mornings, when they come around, it's nice. It's nice. Okay, so I've already marked up my charts here this morning. I'm going to highlight them for you that you can see. The green lines, top and bottom here, are my previous day high and previous day low. I have my London high and my London low. London low is a little debatable at the moment. I didn't want to put a low in at 5 o'clock when we were making a low, so I put it at the swing low, right at 5:10. I also have our midnight open. I also have our, you'll see, October 7th. That is our new week opening gap. We have a fairly decent size 202 to 220, 18 handles. New week opening gap sitting right here. So I got that on the chart as well. At 9:30, when the market opens, we'll be marking our 9:30 price and our opening range gap and see what we have there. It looks like it's going to be a premium gap. We closed up here. $4.15. Yeah, we closed up here. So it looks like we're going to have a premium type of gap here this morning. Let's check out what we got for news. It is not going to be the greatest here. Okay. So for news, Sunday, October 6th, Monday, we got nothing. There is absolutely no news. We got some consumer credit, blah, blah, blah. All yellow folder. We got one orange folder, but that's in Australia, I believe. AUD, that's Australia, correct? Tuesday, what do we got? We got nothing. Again, we got some tentative FOMC member speaks. Again, nothing. Wednesday, we start seeing, we have FOMC minutes at 2 p.m. on Wednesday. Thursday, we got CPI at 8:30 a.m. And then Friday, we got core PPI at 8:30 a.m. So we got a heavy end of week. What does that tell us as far as a weekly profile, that we probably are going to see consolidation towards the beginning of the week and expansion towards the end of the week. So today we're going to be going, you know what? There's no news, but today is a green day or a green lit trading day. So I'm going to be doing my live accounts, but I'll be doing half size. I'll be including some eval accounts in there that I'll be trading as well. Go light. It could be choppy. It's a Monday. Monday on a weekly basis is typically our consolidatory. It's the accumulation stage of AMD. So keep that in mind and make sure you're sizing appropriately. You do not want to be going balls to the walls today. And if it's one of those days where it's beautiful price action, that's okay. I also have on the weekly chart, I have this CE of the weekly wick, as well as last week's CE of the weekly wick right here, and that is in these red dashed lines. I'm not giving the levels because I'm telling you what I did so you can do it. You need to be able to do these, not just necessarily find the levels. If you want to confirm that you have the correct levels, I'm happy to do that. Oh, I'm not. Whoops, sorry. I didn't show that correctly. We're right here. So right here, I have the weekly level and weekly level. Let me show you on the weekly candles. Those are this is what I got on the weekly chart, okay? So I have the weekly level for September 23rd and September 30th. Okay, we have not hit either of those levels. That is a factor in determining whether we're going higher or lower. We obviously have to hit one of these two at some point, so we want to keep track of that. It is 8:30, 9:30, opening price. Bell has rung. Let's mark the price out here. Looks like I'm on the 30 second. Let's go to the 1 minute. And it looks like we're already running the opening range gap right now. Let's see if it wants to continue on that opening range gap or not. I would prefer it not right now. I mean, this looks nice. 9:30 price. We have London lows down here. We have midnight open up here. Let's go back to electronic trading hours here. We already have wicked the previous day high in the London. Actually, what time did we do it? Around 6:30. We did it in the pre-market this morning. I still wanted to run that level in New York session. That's my preferred. That's what I would prefer. I like this manipulation. I'm seeing as manipulation. I want to go higher. I want to go higher. I want to use this opening range gap and the new week opening gap and midnight open as my draw on liquidity. So I'm seeing anything that moves lower as potential manipulation. But it doesn't mean you just take an automatic long. Got to look for your model. So let's wait for our first gap, our first fair value gap, see where that shows us if there's any opportunity. Could be right here. I don't like how big it is. It's kind of small. Swept these lows. All my trades are going to be on micros today. I said we're downsizing, half sizing, no news day. Still going to be trading a live account, but I'm reducing size. All right, we're going to wait for our first fair value gap before we take anything, folks. So we're going to sit, check in with everybody, and wait for our first fair value gap for the morning. Okay. Good morning, ERP. Cassius, good morning. Quick Solutions. Glad to have you. Quick Solutions. I feel it's ridiculous calling you Quick Solutions. What's your name? Give me your name, my friend. Tony, good morning. Felipe, how you doing? Glad to have you. Alkai. Charles. Jason, good morning. Jordy. It's going well, Jordy. Jonathan, good morning. Sandra, okay. Sandra, good morning. Glad to have you. Peter, good morning, my friend. Cameron, good morning. Deborah, good morning. You guys are doing fantastic this morning. It's a beautiful day. It's a beautiful day. Still waiting for our first opening range gap. Our first, wow, mixing up some concepts here. First fair value gap. That's what we're waiting for. Brian, good morning. How you doing, my friend? Glad to have you. Glad to have you guys. I was hoping we were going to get some type of fair value gap that we could go long in here, but it didn't give us that. This wick is looking pretty bullish, but it wouldn't surprise me if we also consolidate right in here. So if it just explodes higher, we miss our opportunity there. If it does explode higher and leaves a fair value gap right here, I'm liking this breaker right there. I just don't want it to go all the way up here. I want to capitalize on some of that. You know what I'm saying? We're also in the middle of a range. Okay? Yes, we can use 930 open as some type of support, but we're in the middle of a range as well. So it's kind of 50-50 on whether we go higher or lower. We just got to be patient. Don't be so quick to try to get into a trade. Right? This is the consistency game. This is the being patient. There's more waiting in trading than anything else. More waiting than anything. Deborah, you got a question. How long is your average trade as in minutes? That's tough. I'm going to break that down into two parts, Deborah. Okay? First part. I'm going to call my 10 to 20 handle trades. My 10 to 20 handle trades are less than 3 minutes. 5 minutes. 5 minutes max. 5 minutes is a long time. 5 minutes seems, for me, feels like a long time. Many times they're 2 to 3 minutes. Okay. My 30, 40, 50 handle moves, those can be 15, 20, 30 minutes. I would say 30 minutes, I would be proud of myself for holding that long. I am most comfortable taking my 10 to 20 5-minute trades, less than 5-minute trades, preferably. Now, I want to expand and grow from that, and that will happen as I do more size. As I take more contracts, I'll be able to take some TPs, meaning I can have a 2-part trade. If I have 2 contracts, I can be selling 1 contract within that first 2 to 3 minutes, getting 10 to 20 handles, and then holding the other contracts for 10, 15 minutes to try to get 50 handles. I also could get stopped out in any of those scenarios. Hang on a second. I want to drop down to the 30 second. Okay, no fair value gap even on the 30 second. Okay, good. Yeah, I mean, you can consider it scalping, sure. I don't even know what I would categorize myself as. I would consider myself a liquidity trader. I trade liquidity. That's what I'm trading. I'm trading price moving towards points of liquidity, and those are always swing highs. Swing highs, swing lows, imbalances are another one. How do I manage trailing drawdown? I've had to do that quite often in the past. I actually have one account that is actually one account that was in about 1,400 in drawdown. The easiest answer, first off, is take a break. Take a break, step away. Hang on a second. I want to see if this is moving here. I don't want to get distracted. We're coming up in. I want to answer that, Josh. So give me a second here. Because I feel a rant, not a rant, but a conversation where I don't want to be interrupted. And I want to say that clearly. So I'll jump into that. But the short answer is reduce your size. Cut your size in half. Or if you're already down to a single micro, then maybe you're not even ready for a live account yet. But if you're doing, let's say, 5 micros, or you're doing 1 mini, drop down to 5 micros, or drop down to 2 micros, 1 micro, until you build the confidence and you get yourself out of 50% of that drawdown. So if you have $500 in drawdown, your goal is to make $250 back in the reduced position size. Okay, your goal is not to get out of drawdown quickly. Your goal is to survive while you learn. If you're not learning as you're doing that, you're not doing your back testing, you're not sitting in front of the charts, price reading order flow, you're not going to get better, and that drawdown's just going to continue. So if you're in drawdown, there's a reason you're in drawdown. Mistakes happened. You need to recognize those and being able to learn from those mistakes. We're sitting here, folks. We're sitting here waiting for some good price action right now. We literally got nothing. This is nothing. This is nothing we want to trade. And the more you become comfortable with that, the better trader you're going to become. I remember when I first started trading, man, I was just itching for the guy I followed to take a trade. I don't even remember the kid's name. Yes, he was younger than me. I don't even remember his name. But I didn't learn much from him. He was just an amazing trader. he would make like $10,000-$13,000, but it was in options. I don't trade options anymore, but he could never articulate clearly how he did what he did. So I don't even know. All right, it looks like we're going to get our first fair value gap here. Let's see if it gives it to us. I hope it doesn't close it. Well, it looks like it's closing. I think we'll get it. There it is. All right. Here's our first fair value gap. Low resistance liquidity. It's been looking choppy here. Relatively equal lows down here. Right close to the London low. Josh, that was my short answer. Does that answer your question? We made equal highs here on the 5-minute. You can see this. Makes me hesitant on a short. We got equal highs here. High, low, higher, high. Fair value gap. I'd be interested if we find resistance. If we come back up into this fair value gap, I would treat this as a breaker. But I'm going to wait for a 1-minute change in state of delivery. If price isn't going to do what I want it to do today, guys, listen carefully. I'm calling out what I want. Meaning, I wanted price to come up in here. It didn't. And it's dropping right now. I'm not going to get in a trade because I thought it was going to go lower in anyway, but I wanted it to come up into here. I wanted to do what I tell it to give me the confidence to get in, because I'm expecting a lackluster type of day, okay? That's kind of what I'm expecting. Sam, welcome. How you doing, my friend? What is the best prop firm in my opinion? I can only go on experience. I've used two. I've used Apex and I've used My Funded Futures. Both are very similar in many ways. I think between the two, personally, and I will caveat, and I will say that I do have an affiliate link with Apex. I do have an affiliate link with Apex. I want to make sure I clarify that before I share what I'm going to say, because sometimes it's very easy to people think that I push people one way or another. Felipe, I would agree. Those would be the top three. I have preferred Apex for two reasons. One, I can have, when I get my funded accounts, I can pay one-time fee for them, and I can have them for 10 years and not pay anything else. Meaning the funded accounts I have right now, if I don't blow them, I will not pay anything else on them, but I can continually take money from them. Number two would be, it allows me, and correct me if I'm wrong, anybody else in the stream, is I don't think there is another prop firm account that allows you to have multiple accounts and trade them all at the same time. Meaning, I can copy trade 10 different Apex accounts. So I can focus on one Apex account, and if I make $300 on one Apex account, if I have it copied, it'll copy to all of them. Before I continue that conversation, I'm watching the charts right now. This was our initial fair value gap. We obviously blew right through that. So anything, we also have 930 right here. Let's see what happens with this candle. If it's a large candle, we made equal highs here, so I like playing long on this. Let's see where it closes. Okay, no trade, no trade. Take that away. This is a nice breaker. Forget this breaker here. We respected this fair value gap and this breaker. High, low, higher, high, breaking lower. This whole thing is the breaker, guys. This whole down closed candle is our breaker. That wick was sick. Sick it was. Sick it was, Deborah. This is why we wait for the close. There are times that I'll get in before a candle closes, but when you see a candle like this, full green bodied, with 50 seconds, 45 seconds left on the clock, you have to wait. There's too much time. Like, see, 5 seconds left right now. I would be okay getting in before the candle closes with that much time left. 10 seconds, sure. Sorry, I meant Tony. Did you say something? We have a 1 minute breaker, a 5 minute breaker. Hi, bearish breaker or bullish? Nothing's clear to me right here. Yes, I mean, nothing stands out to me here personally. That body respected the consequent encroachment. So wick, consequent encroachment. Let's see if we get displacement from this. I don't see really downside target would be this liquidity down here. But honestly, I probably would just go for 10, 15 handles and get out if we go lower, because the market is not super clean. So I'm watching this fair value gap. I want to see where this body closes in 14 seconds. Now, do you see how it looked like we were going to close but didn't? This is why we wait for the close. Let's see if we close below this. I might. Nope. See how we closed on it? That wasn't, look, I'm zooming in. We did not close that. Even though it could still run in our favor downside, because I have these two fair value gaps. These are the two that we're watching. I'm not taking it. I want it to do what I want it to do. And if it doesn't, I'm sitting. I don't even care. I don't even care. I care more about preserving my capital. I care more about protecting what I have. I don't need to try to get a trade. The trades will come. I mean, you've seen the trade. You guys, if you've been here for any amount of time, you've seen how easy some of these setups are. You've seen how easy these suckers play out. You have to just be patient. Like, I was thinking about getting in early there. All right. We're going to go short there. It needs to move fairly quickly. If it doesn't, we'll close this trade. A close above this fair value gap is a close of the trade. Order flow is showing me to the downside right now. This is why I'm willing to take it. I'm looking for 40 ticks to 60 ticks. 40 to 60 ticks. As soon as we hit this low, I'm moving my stop to break even. I'm looking for a break of this low. That's my target. All right, there it is. I'm going to close that trade for 70 ticks. That's 17 handles, folks. 17 handles. This could absolutely drop, and I'm okay if it goes without me. I'm okay. I'm okay if it goes without me. Yeah, do I have feelings of, oh man, I wish I would have doubled my size. I wish I would have been in triple the amount that I was. Absolutely. If you don't, you're not human. The issue is, what do you do with those feelings? Do you let it consume you and then you get into another trade because you want to get more? Or do you just let it go? Dismiss it. Reject it. Like, no, I'm content with what the Lord has given me today. You have to be content with what you receive. In time, you'll grow. Next time, you're like, you know what? I'm more comfortable taking bigger size on no news days. But just be content. Would you rather walk away green and be consistently green, or want a bigger payday with the risk of losing it all and then going into drawdown by a few hundred handles? Because I can tell you from personal experience, that's exactly what happens. It doesn't mean we can't take another trade. We wait for the next setup. I mean, look. It's reversing right now. This is why I close the trades on days like these. Sometimes they'll run, sometimes they don't. And I just want out. Look at the 5 minute. We just tapped the order block right here. And we have a breaker right here. The wick of the breaker is right there. I wouldn't surprise me if this propels this price lower. Let's see if it does. Right here, this is the breaker. We have no fair value gaps. This is an order block also right here. If everything else stays the same, this should propel us lower. When we say, Deborah, I get greedy. Sometimes we think it comes from a good place. We want to provide from our family in a different way. And I totally get that. But for whatever reason, it affects our psychology and our ability to reason correctly. Look at this aggression right there. This is beautiful. We're watching this 930 price. Okay? If we can get through this, we got a swing high here and here. We can move our stop to break even fairly quickly. Let's see if it wants to continue. I liked how aggressive that candle was. I want it to continue to be aggressive. I bet you there's a 30-second fair value gap in here. Right here. Do not take this. We never grabbed any real liquidity to the upside. It could absolutely work, but I would not be taking it. So I'll take that off the charts for you. Let me help you out, folks. What do you guys think of the new thumbnail? You guys are liking that thumbnail for the live stream? It's better than the last ones, right? I decided I'm like, I need to level up the look. I got 3 of them. That's why I'll rotate between 3 different thumbnails. So it's just not the same thing over and over. And I can find out if one has a better click-through rate than some of the others. So right now it's about 10 o'clock. We got 42 seconds till the top of the hour. And let's see if we get some type of candle. We've been basically on a slow grind lower. If you guys are appreciating the live stream, hit the like button for me. I would greatly appreciate it. You guys might not see it on my end, the impact of it, but the like button tells YouTube that you are liking it, and it lets other people know about it. And the more I let other people know about it, the more I can do this for everyone. So thank you. What stage are you in? What stage of what? Where am I personally in my trading journey? I can answer that. I really don't like how we didn't hit any real liquidity on the downside either, on the sell side. It's just like we're just doing this thing here, right? Oh, what stage are we? Got it. Yeah, that was, I don't know. We're waiting for something. Sometimes accumulation, manipulation, distribution can happen. I mean, let me give you an example, Deborah. I wish it was that simple. This is a 15-second chart. On this 15-second chart, we see accumulation, manipulation, distribution. All that happened right here. Then we see accumulation. Maybe this is part of the manipulation, and then distribution again. You can do it on very small time frames. You can also do it on big time frames. The thing about where we are right now, it's very hard to tell. Why? Because, actually, no, I think I know the answer. But we're between previous day highs. We're between previous day highs and lows. We're between the New York and London high and low. We haven't really done any displacement anywhere. So if I'm looking at this and I'm gun to my head and I have to figure out and give you an answer right now, I think we're still in manipulation. I think the distribution is to the upside. I'm still liking this level here and a close above 930. Okay? So even though we saw a push higher here and you could have called this manipulation and this distribution, I'm looking at this as all of our manipulation. And I'm just waiting for that dish. I'm just waiting for the displacement. Daily. It's my narrative. I think we are going to go higher to these equal highs, to this midpoint of the opening range gap, to the new week opening gap here in the midnight high. These are the levels that I'm looking at that I think we're going to come up at least to. Somewhere in this area here, and that's what we're watching for. Somewhere in this range, we're going to hit. To me, that's the move I'm looking for to capitalize on if I can. Ideally, I would love to hit some type of low before we do that. Why would I want that to happen first? Because price runs for only two reasons. It runs to grab liquidity and fill imbalances. We haven't ran liquidity or filled imbalances yet in this price action here. Maybe let me go to the 4 hour, see if we see anything here. Yeah, there's not even a 4 hour fair value gap. Not even a 1 hour fair value gap. There's nothing here. So I think the move will be to the upside. And right on cue. Maybe this is it. Let's see. I'm looking at this as a break even, moving my stop to break even. If we close above this, I will probably take this. I like the displacement if it can close above it. If it doesn't, then I'm sitting out, folks. And it already looks like it's not going to go. Oh, it closed. Dang it. It's going to make me decide. Yep. We'll do one. We'll go long on this. That's my break-even point. Actually, I'm moving it now. I'm going to sell a contract. I'm going to sell 2 contracts there. And I'm going to leave the remainder for a larger run. Holy cow. It stopped me out. You see how fast that moved? I wasn't even able to change my position to break even. My contract size, it filled me on all of them. That sucks. It took some of my profits away. That's all right. But that was another green trade. Another 60 tick move. What was that? We got in about there. Hang on. And we sold one there, 17 handles. Yeah. Another good trade. Way to go, Charles. That is all you need. 40 tick, 10 handles is all you need. Be consistent first at 10 handles. Then go for 15 handles. Then start reaching for 20 handles. Selling some at 10, some at 15, right? You saw me try to do this. It just didn't work out. I sold 2 here and I wanted to have one at break even, and it basically stopped me out right at break even almost immediately. So I was hoping I was going to be able to take another contract and maybe run these equal highs, but it didn't give it to me. What did it run? This liquidity, and then it turned. What have I been telling you over and over and over? Price runs for 2 reasons. Liquidity, imbalances. It violated this fair value gap. Meaning, it filled and ran through this imbalance. If it ran through an imbalance, what do you think it's reaching for? It's an easy answer. It's reaching for liquidity. Now, the thing we don't know, and we will never know, is it reaching for this liquidity or this liquidity? Or is it going to run higher altogether? We don't know. So what do? We take profit at the swing high, and we move our stop loss to break even to protect our position. Because what could happen? This right here. You're seeing it firsthand. It could run back and forth, going from liquidity to liquidity, buy side to sell side, buy imbalance, sell imbalance. It could go back and forth. And this is the type of day we expect it. We expect this type of price action on days like this. No news days. No news days. Don't let all these candles, this large down close candle, start manipulating you and making you think it's going lower. It could not at all. It could stop right where it's at, and then you're stuck. Correct, Deborah. Wait, so for 10 ticks, what should stop loss be? 5 ticks? No, let me take that back. Deborah, you've been here for a little bit. I know I've said this before, so I'm going to put you on the spot. When I take a inversion fair value gap model, the model which is right here, when we break a fair value gap and we target this swing high, where have I said we put our stop? Where is our stop and when is it stopped? If somebody else wants to answer, go ahead and drop it in the chat. Somebody on this chat better know this answer. We've talked about this dozens of times. Okay, you're about to learn something. Just remember what we're about to talk about. Okay. No. We are going to talk about, this is why we lose, guys. You need to know the rules inside and out. You need to know it like the back of your freaking hand. You need to know these. You need to know them and just be able to execute on them, okay? Let's talk about the trade that I just took. What were we watching? We were watching this fair value gap right here, okay? We were waiting for it to close above it. When we closed above, that's in our inversion model. When we close above, we go long. What do we target? We target the swing high. Guess what it ran? A swing high. We do not have a stop loss, or we have a stop loss that's sitting really low until we hit our liquidity. Your liquidity could have been here, or it could have been here. Why could it have been here? Because this is a separate price leg that has a swing high. So when we run above that, you would move your stop to break even. Now, we don't do it on this candle. We do it on the candle we enter on. We entered on this candle. We entered on it down here. So as soon as price hits the swing high, we move our stop to break even. Now, if we do not hit, let's just assume we're targeting this high right here. Let's assume we don't hit that high. Where does our stop go? It goes at the low of the fair value gap, and it's only activated when we close below it. So when did we close below it? Did we close it below it on 10:05, 6, 7? Which candle closed below it? 10:05, 10:06, or 10:07? It would have been 10:07. So where would you have been stopped out? You'd have been stopped out right there. That's where you would have been stopped out, because we wait for the candle to close below the fair value gap. So this would have been your stop out, 4 handles on that trade. If we do not close and we wick back up inside this fair value gap, still not hitting our liquidity or not hitting our swing high that we move our stop to break even, we let the trade play out. We don't do anything. We wait for closes of candles, because the close of a candle tells the story on where price is going to go. Is that clear? Are we on the same page, everyone? Yes. So this is the candle you watch to enter on. The 10:04 candle. 10:04, look where the body closed. Where did the body close? Above the fair value gap that we were targeting. Fair value gap. Close above it. I'm not doing anything with this, folks. There's not even an entry model here. There's nothing for us to go long in. There's nothing here. Don't say, oh man, it's going to run these highs. It probably is, but you're not going to get in. Why? Because if you get in right here after it just ran this high, guess what it could do? And if it drops all the way down here, do you want to hold it 10, 15, 20 handles? I don't. That's why we don't take momentum trades like this. In some cases, you can. But in my opinion, this is not one. Why? We never ran liquidity either. We didn't run any type of liquidity. This could turn the other way in a second. Okay? Josh, going back to your question. Fair value gap. We closed above it right here. Right here is when you get in on the next candle. The opening price is where you should be in it on the 10:05 candle. Opening price. Now, if you didn't get in right away and you see it wick lower like this, or you see the candle go right, if you see the opening candle of the previous candle where it closed above and it immediately goes down, I love those trades. I will get in down here then, because we still have 55 seconds left on the candle. Remember manipulation. Manipulation happens first. So when the candle first opens and it runs lower right away, what do you think that is on the individual candle? It's the manipulation. This candle is trying to manipulate you, make you think we're going lower before it reaches for the liquidity. Guess what it did? It went lower. We got in here, right around 20,133. We got in here. We ran this high. And we took our profits once we ran that high, leaving a runner to see if we wanted to run higher. We didn't. It came back and stopped us out at break even. Because why was it at break even? Because as soon as we hit this swing high, as soon as we boop, pop, swing, go right above it. As soon as we sweep that high, we have to move our stop to break even. Wherever your break even is, you move your stop to break even to protect the profits you just made. If you don't, I promise you, you will hurt yourself. Guys, this is one of the easiest models to trade. It is so straightforward on the rules. You just have to do them. I told you we were going to hit these equal highs. We did it. Now, if this body closes above this equal high, if we get a body close above here, my next assumption, my next analysis is we will run the rest of this. At least running to here. Now, I'm going to answer this because I can already hear you in my head. If you know that, Tyler, why are you not going long? The answer is because it could do this right here. It could wick higher, retrace, run higher, retrace, run higher, retrace. If you want, take a very small position. Take a micro contract that you're willing to go down 20, 30 handles in. If you're willing to go down 20, 30 handles from this point right here, take the trade. But you also got to be okay if it runs past that and you lose. That's what you got to be okay with. I'm not okay with that. I'm not okay with that. Right now we have 3 candles have closed below this. I'm guessing we probably still will get a close above, but this tells me we could retrace before we see a higher push. Look at the rest of these candles. Up or down, up, down, up, down. It's just back and forth. So why would I think that it's just going to do a straight shot here? Why? Why would I think that? Why would I think that when we really didn't run any good amount of liquidity that gives me true confidence in where price is going to go? That's false hope. That's false hope. You can't think that way. You can't think that, oh, well, it's now just going to run straight for it when you see this right before it. No. Could it do that? Sure. Go without me. That's not the model I'm trading. I'm trying to find 10 minutes, 5 minutes of my model within 23 hours of trading. The market is closed for 1 hour a day, and I'm only looking to get 10 minutes of a setup. 10 minutes. That means I have to wait a long time, potentially, to find that 10 minutes within a 23-hour period. ERP, why are you not using tick chart like 1,000 ticks for NQ? Because time and price. I don't trade ticks, or I don't trade the amount of ticks, a certain number of ticks. I trade time and price, and I need time to be a part of the equation. So I don't want this candle to close after we hit 1,000 ticks. I want this candle to close when it's 9 o'clock or when it's 10 o'clock, when it's 10:15. I want it to close based on time, not ticks. Time is everything. Time is everything. You do what we're trying to do at the wrong time, it doesn't work. It doesn't move. It consolidates. Time is everything. Macros. I will be doing a lesson in the Purpose-Driven Trader Academy that talks about macros, when the macros are, what to look for in the macros, how to use the macros, why macros are important, can you trade outside of macros? All of those things we'll be going over. The short answer is macros are the last 15 minutes and the first 15 minutes of every hour. Macros have a higher tendency of running compared to giving you fake outs. So if I know price is within that time, that's when I want to look for my setups, not because it hit 1,000 ticks or 500 ticks or whatever it may be. Does that answer your question, ERP? Sandra. Yeah, real quick. Macros are between 10:45 or the last 15 minutes of the hour and the first 15 minutes of the hour. The exceptions are, I really don't do 11:45 and noon. I usually wait for noon. And then the last hour of trading has 3 macros. It has 3:45 or 2:45 to 3:15. It has 3:15 to 3:45. And then 3:45 to 4:15. Everything that I'm sharing with you guys is ICT Concepts. These are ICT Concepts. That is how I trade. That is what I learned. And man, it keeps me on point. I tell you what, that has helped. So folks, I've closed my accounts. Will not be taking another trade. I got 2 winners. I got what I wanted out of a day that is not moving very cleanly. In my opinion, we've taken the only 2 trades that the market gave us this morning. There could be more, but I'm not interested in taking them. I didn't get the full amount that I normally get in a trading day, but I'm okay. I'm okay. I do expect price to continue higher. We found support here. You can call this a breaker. Low, high, lower, low. Support. You can see it on the 5-minute. Low, high, lower, low. You can see it on the 15-minute even better. Here's our beginning of our push. Let's see if my guess is we're just gonna get this. That was nasty. I don't know why I'm making this look pretty. That's what I think is going to happen. But, you know, I've been wrong before. It doesn't matter, though. Why would I call that? I call it because I want to see if I have the right idea for price. You have to make predictions. You can, if it helps, write them down. Just make a note. Put it on your chart. Say, slow crawl higher. See if you get it right. Put it on your chart so you can just keep tracking. Keep an idea of it. If you think price is gonna bearish breaker. If you think it's you're gonna hit something, you're gonna hit a bearish breaker or you're gonna hit a bullish breaker, right? So here was a bearish breaker right here, right? So you put it here, you just watch and see what happens with price and see if you get it without taking the trade, or do it on demo. Do a demo trade so you are paying more attention to the trade. Let's see if you guys want to see the logo. You want to see the logo review? You guys want to get a sneak peek at what the logo is going to look like for the Purpose-Driven Trader Academy? I'll give you a sneak peek. Hang on, it's going to make me log in. It's loading. Ooh, you're gonna see 2 thumbnails. You guys it's your lucky day. Let's see if I like it first. All right, first one. Skip, I don't want it. All right, here we go. You guys want to see that? You want to see it? Here we go. This is for the Trading Academy. Actually, that has the wrong. It is right. This is the wrong mock-up. Hang on a second. There we go. There it is. There she be. I like it. My goal is to kind of, a little bit of gold, a little bit of blue. There she be. I'm excited about it. Okay, I want to see. I got another. Can't show you the next one yet. I'm disappointed in it. Son of a gun. I'll tell you the name of the video. It's going to be, what is it called? Actually, I don't even know what I'm calling the video. You're going to have to wait. You're going to have to wait on that, folks. Sorry. I was hoping I was going to be able to show you something. Actually, I'll do this one. I'll do one. I'll show you that. I'm not going to use this. This is not the one I'm using, but it's okay enough to give you an idea. You want to see it? Ready? Here it is. Here it is. Ready? I mean, it looks really good. It's just not everything I wanted him to do. You're like, what the heck is going on? It does. It looks fantastic. I mean, I can't complain. He just didn't. There's like 3 things I asked him to do, and he didn't do it. That one is about. The video is going to be about how the devil manipulates you without you knowing it in regards to your trading. We talked about it in live stream on Friday. What's up, Viking? How you doing? You making some money in this choppy chop? I mean, guys, if you're frustrated or you're like, man, I'm bummed that Tyler's not trading anymore, look at this. Look at this disaster of price action. We literally got the only 2 setups in the market. In my opinion, the only 2 setups. Nope, I take that back. I did call another. Do you guys remember how I called this? I called the breaker right here. I called the breaker. High, low, higher, high. We came lower. Came back up into the fair value gap. I said I wanted to see it come into the fair value gap, reject it for a breaker lower. We did see that one, but we didn't take it off the breaker. What did we take it off of? We took it off of the inversion fair value gap to make sure we knew that price was going to move in our direction. It closed way down here. I didn't like the close. I waited to see if it was going to come back up and touch it. It did. I got in when we came back up to the fair value gap, and then we dropped, sold it below the swing low. Deborah, that's that my goal wasn't to make it look scary. That's why I needed. He didn't do what I asked. I asked him to put a rip across my face, revealing that image, so that the rest of the image was not as dark. Jason, nice call Monday. Deborah, so will you still live stream on here? What are you talking about, Deborah? I do plan on live streaming. Okay, macro is coming up in about 7 minutes. Well, we'll see what happens in this macro. 10:45 to 11 a.m. And we'll see what happens on the with the macro. Deborah, I will do YouTube as my audience grows and those that join the purpose-driven Trader Academy grows as well. I will do less on YouTube as far as live streams. I'll always have some period of live streams on YouTube, but eventually, I don't know when that is, eventually I will be, for lack of a better word, I will be putting a paywall in front of it. Not right now. And it's not going to be very expensive. Not at all. I just don't want to. Here's the thing. YouTube. So somebody, who was it? Ooh, nice displacement there. Let's see what happens on that candle. Was it? I can't remember. Deborah, was it you that did a super chat? I'm on the 1 minute and then the 5 minute is what you see. Cameron. Whoever gave me the super chat, I'm pretty sure it was you, Deborah. It might have been Diane. It might have been Diane as well. YouTube, out of that $5 super chat that was given, YouTube took $1.50. Just for the mere fact that it's on their platform, they take 30%. Oh, what's the timeline for that? I'm hoping that the Academy comes out by Black Friday. Black Friday is close. Is what I'm hoping that I deliver that. My live streams are still going to be on YouTube at that point. I'm just releasing the Academy so that people can get complete training beginning to end. And then it will also give them access to a Discord for more collaboration when I'm not on stream. Okay, so that's the goal. Is we do that. I will continue to do YouTube live streams here until that community gets large enough to where it's demanding more of my time. Yes, Deborah, they literally take 30%. They take 30% of everything. So this is why most creators don't do everything on YouTube. Because they take so much of your profit. So if I do it outside of YouTube, I basically have less of a fee I pay to somebody else. That's why it happens that way most times. But I'm not, my main focus isn't on how can I get more money. That's not. It's just I hate giving money away that I don't have to. My goal is to provide content that's valuable to people, and I know everything else will be taken care of. But if I don't have to unnecessarily give money away to YouTube of all organizations, I don't. YouTube don't need my money. It's also one of the reasons why I'm not running ads on my channel. I could run ads right now, and every like 10 minutes you would get a pop-up ad in the middle of our live stream, but I am not monetizing these live streams. As of right now. It could change in the future. I'm not a fan. I can tell you how much I hate ads. A lot. All right, look how, man, this has just been disgusting. We can't even get up here. We hit the midpoint. Look at the midpoint of the opening range gap and look at the bodies. Look at the bodies. Respect the midpoint of this. Okay? Very interesting. Typically, you see the midpoint hit within the first 30 minutes. We did not get that. We got it roughly an hour into trading. And now it looks like that's as high as it wanted to go for now and may displace lower. Here's our last fair value gap sitting right here. If price runs below this one, we could potentially take a short to these swing lows right here and hopefully targeting these lows down here. That's how you do it. That's how you do it, my friends. All right, it is 10:45. Macro time is commencing. We have no fair value gap on this displacement lower, so it makes this not look very attractive right now. Really, honestly, guys, there's nothing really good here. But sometimes it can just pop out of nowhere. Was there a 3-minute? Sparhawk? So here's the thing about that. If you have multiple fair value gaps, you have to go with the lower one if you're looking for a downside move, or the higher one if you're looking for an upside move. Because you could see it hit these levels and then just reject it. So you got to be very careful doing what you do. Assuming you took that short on the 10-15 candle. If you took that short on the 10-15 candle, I personally would not have taken that because of this 3-minute sitting right here. It's as far as my rules that I trade, I would never take this one. I would take this one. Now, what could you do on this one though? You could treat this as a breaker. High, low, higher, high, displacement lower. We wick back into this inversion fair value gap and you could go short right there. So that's another trade, that's another model, not the inversion model that I personally trade. You could actually, if you want to make your model out of that, you could. I just see that these fail more often. The 2 minute has one here and then another one here. So again, you would want to do the lower one, which is down here. And price has not closed below that lower one. But same point still applies. If you were going to do this one, see how this one failed? We closed below this right here, 2 minute, it failed. So you wouldn't even want to consider this anyway on the 2 minute. See how it's respecting this 3 minute? So I do like this 3 minute. It's respecting that 3 minute and the 930 price. If we close below this, I would say we're short-term bearish to these lows, potentially to this London low here. Ted, no news today. And on Thursday and Friday, we have CPI and PPI. When you have big volatile news weeks, typically, if they're later in the week, typically the beginning of the week is choppy. Here's a breaker entry right here. I don't like it because we got too much supporting evidence for higher prices. 930, we closed above 930. We went into this 3 minute fair value gap and rejected it. I would not be wanting to go short here now that with what I'm seeing. On the 1 minute, if I was to pick one, I like this 1 minute. Because one, it's lower than all the others, and two, it's a single minute compared to waiting 3 minutes. It doesn't show you this fair value gap here though. So I like this 2 and 3 minute fair value gap sitting here to see the breaker. High, low, higher, high. I like this rejection into this order block. So I do see evidence of lower prices, but I would not take this as my entry because there's evidence that we could go higher. So what would I rather do? I'd rather add this breaker idea and group it together with my inversion play that I want to take I would want to take right there. I'm not taking this trade. I'm talking it out. So if we see the rejection here, I'm taking this trade here because it rejected here and giving me the idea that we want to move lower. If it doesn't go lower, guess what? I didn't take the trade, so I don't lose anything. I don't have any losses because I didn't take that trade because there's too much evidence that price was still going to go higher. Look at the 930 price, guys. This is one of the first things I put on price. And look at that. It closed almost to a tick, respected it and the opening range gap, and is now moving higher. This is why we put this stuff on the charts, because you have to consider it when you're making your trade ideas. And the more you see it, the more you're like, dang, let's put this on here. Dang, let's put the opening range gap on here. And let's see how price continues to react with these levels. And let's take trade ideas with these in mind. Oh, I bet you. Do I still have that on here? I don't even have that first fair value. I don't know why I took it off. Always keep the first fair value gap on here. Oh, I like that even better, folks. Look at that. Look at that delivery. To the tick. Okay, look at the manipulation. I like this if it wants to be aggressive. Still willing to look at this. I am going to do, I'll do a paper trade. If this gives it to me. I'm on a paper account. Let me prove it to you. I'm going short 500 clicks here. I just went short with 4, right? I don't care. I'll exit out of it. Okay, this is a paper account. Now the thing I wanted to make sure, Sparrock, you're hitting the nail on the head. How did you get ORG? So I drew a box. A text pops up. I put ORG or example. Whatever you want to write. Click it. Select templates. And then save drawing as a template. And then it shows up in this list right here. And there's my opening range gap. So when I select this, watch what happens. It changes to what I saved my template to be. Here's the thing. ERP, you hit the, Sparrock, you hit the nail on the head. Its price action is crazy. Here's the thing. If you can say to yourself, wow, look at this crazy price action, and you understand that it's crazy and you don't put a lot of expectation on it, then your life will be much better. Because your models, reading price action is way more difficult in environments like this than it is when price is just, respecting everything. So you need to just mentally prepare yourself and say, hey, this is crappy. I'm not going to expect price to respect specific PD arrays. Another way would say it, I'm not going to put a lot of weight in my analysis because I already know it's crappy and it could run against me. So that you're not scratching your head trying to figure out, I don't know what's happening with the market. I can't read it. I don't understand it. I just feel like I know nothing. And then you get in your head because you thought you've gotten better at your price reading abilities, and today destroys that conceptual idea, but it shouldn't. Why? Because we are already expecting it to be a crappy day. So when it's already a crappy day, you can set your expectations lower and just go, you know what? It didn't work out because it's a crappy day. And wait for a better day to see how you read price. Price does not want to go lower, guys. It's going to go higher here. We hit the first fair value gap. We bounced off 930 price. We have our new week opening gap up here as a draw on liquidity. Why is this a draw on liquidity? It's because there has not been any trading in the New York session between this high, this high and this low. This is inefficiently delivered price action between here and here. And we don't consider before New York Open. We want to see it run during New York Open, which is where you get the majority of your liquidity. All right, we got 3 minutes till 11. We'll give it a few more minutes after that, and then I'm calling it a day because I won't be taking another trade on my live accounts. Now, if it's me, I would want this to run very quickly. It would not surprise me if we're aggressive here. Because look at all the crap, and now I think it's ready to run. We're in the macro time. I'm guessing it's going to be very aggressive to right here. It's going to do boom, maybe boom, boom. That's how I'd want it to see over the next 15 minutes. Even 5 to 10 minutes is what I would like to see. Yep. I mean, look at the order blocks we got right here. Here's our down close candle. Order block number 1. Order block number 2. This is a propulsion block. Why is it a propulsion block? Because we see price expand immediately. I would like to see this next candle run aggressively above this high right now. I would say it's allowable to come back down here if it needs to, but I don't want it to stay around here. And if it doesn't and just goes down, then I'm wrong, and it truly is a crappy day. Do you see what I mean? I'm not putting a lot of weight in my analysis. I'm still doing my analysis, but I'm not like distraught because it doesn't do what I thought it was going to do. But this still helps you learn. So when you see this type of environment again, you don't put as much weight in something that you think is going to happen, or you don't take a trade off of an idea that's 50-50 because you understand the environment that you're in. See, look at that. Isn't that, there's no reason from what I've seen in price action for it to do something like this. But it is. It's okay. It tells me that, man, Tyler, you were right. It is a crappy day. Don't put a lot of weight on your analysis. Because my analysis is not my model here. I'm just trying to read price. Okay? I still like this idea here. See, now I'm coming back to this fair value gap down here for an inversion play. Let's see if it actually wants to have a large displacing body close, or if it's just going to be a big wick again. If it's a big wick, then we're still going higher. That's how I see it. All right. I think, based on this, I think we'll go lower here. This wick still is a little sus on what's going to happen. We just have to watch price. We have an order block right here. Do we get through the midpoint of this candle, of this wick? Do we close below the midpoint of this wick? If we do, we'll probably see this low ran, and potentially close below this fair value gap. No, ORG is opening range gap. Opening range gap is when we select regular trading hours, the gap from when price closed yesterday to when price opened this morning. Yes, so I'm sorry, ERP. That is previous day close to the previous day, to today's open. If we get down to 10 seconds and we're being aggressive, this is one you can front run. Let's go big, crazy numbers. Huh? Why not? Oh, it's not even going to give us a trade. All right, so obviously we ran through these levels here. I'm watching this level now, see if that's a breaker. I wouldn't take the breaker. What would I take? The inversion immediately following the breaker. This is going to be a good trade, guys. I feel it. Why am I not taking it then? Because I'm done. Discipline. I'm done. I'm taking it on a demo account. If it gives it to us, obviously. Obviously, you can see how much this 930 price has been respecting. Man, with how much it's respecting, you could probably go long right here and probably get a win out of it. Oh, look, disappear. There it is. Still 33 seconds left. Can't do anything. Don't freak out when you see a candle like that. The one reason I like TradingView is right here. I love that it shows me the time left on the candle. When I see a big displacing candle like that, or a candle that's showing aggression, the first thing I look at is this. How much time is left? Oh, now that I know that we got not very much time left, I'm going to hover above it to see if we get something. So there's no close. Now, if this is very aggressive right here, do I do anything? No. Why? 50 seconds left on the clock. I want to get it when it's 5, 10, 15 seconds left on the clock. Something when I know we have a greater chance of it not just wicking lower and then running the other direction against me. I said this was going to be a good trade. We might not be able to get it, but it's going to run. This is what I think. All right, so you could go in now, but I'm not because I want to wait for the close and see if we get a little bit wick higher here. Nope, I'm going to go in there. Okay, first target is this level here for break even. Second target will be this swing low. Third target is going to be the London lows. When does this trade close, folks? We just talked about it. When we close above this fair value gap. When we close above this. If we close above this inversion fair value gap, we close the trade. That's when the idea is wrong. This is a demo trade, so there's zero stress on me right now. If this loses, I lose nothing. I'm not worried. You have to make sure you're sizing appropriately, for especially if it decides to run the other direction really aggressively. I'm watching the close. We got 10 seconds left. If it closes above, we close the trade. Hitting 930, rejecting. I want it to wick lower here. That would be the close of the trade right there. Okay? Could it still run in our favor? Yes. Are we on a crappy, choppy day? Yes. This is why we sized down earlier in the day, because not all trades work. And this absolutely could still run. It's rejecting 930. If I was in a normal sized account or in a live account with my reduced size, I probably would not have closed my trade. I closed this trade because I want to articulate the rules that we go by. Okay? Why wouldn't I have potentially closed it? Because look, we got a breaker, high, low, higher, high, rejection, and we have 930 price sitting right here. So I probably would have held it a little bit longer and see if we want to continue to move higher. I'll re-enter this if we get below this again. But I want to know for sure that this was just a manipulation leg or a retracement leg. And so far, this candle is not showing me that we want to go lower. So I would be out. If I had my live account, I'd be out because this wick is not convincing me. Okay, folks, I'm going to call it a day. This price action is truly not very good. Yes, it hits levels, it's bouncing off levels, but it's not flowing, it's not moving, it's just being choppy and going back and forth, which makes it very difficult to read. So that's going to be it for today, guys. We'll see you in the next live stream. Will probably be tomorrow. If not tomorrow, for sure Wednesday. I usually go Monday, Wednesday, Thursday, Friday. Tuesdays are iffy, depending on my availability. So we'll see what happens with that. So other than that, guys, God bless you. Thanks for being here. Use the code DTJ if you're looking to start your journey on Apex. I would greatly appreciate it. It gets you 80% off. Hit the like button if you appreciated the commentary today. Thanks for watching.